Hello and welcome to ICA in Conversation that broadcasts on the second and fourth Wednesdays of each month. My name is Tim Tyler, and today we're going to consider the challenges around the intersection between, or the particular challenges that the intersection between the art market and financial crime present. To do this, I'm delighted to be joined by Aisling Twomey. Aisling, welcome.
Thank you.
A little bit about you. You're currently holding a senior financial crime position, or Aisling currently holds a senior financial crime prevention position in a national bank, and has held similar positions in recent past. Prior to working in financial services, Aisling, you worked in the aviation security sector and for a number of human rights charities.
Yes.
And I was fascinated to read that you've delivered human rights education on behalf of the Council of Europe in Ireland, Azerbaijan, and in Hungary.
Yeah.
And you're currently studying for a PhD in relation to money laundering in particular in the context of the art market. So it's fantastic to have you with us and to have a conversation around this subject. Before we do, though, can I say that, as ever, we would love to hear from you, your thoughts on this subject, any questions that you may have. Aisling and I are going to speak for about 20 minutes, but for the last 10 minutes, we're very keen to hear your questions, what's on your mind, so we can respond to those. So type them into the comments section on the LinkedIn event. I'll be scanning through this from time to time, and we'll draw on that for the final part of today's webinar. But let me briefly set the scene. In 2020, the EU or EU jurisdictions for the first time introduced regulatory requirements to prevent money laundering and terrorist financing through the art market. As recently as 2023, the Financial Action Task Force has published a typology report that focuses on this particular threat. And if we look outside of the EU, we see a patchwork of countries starting to or gaining momentum in the regulation of the art market for these purposes. So this is topical, and it presents some particular challenges, and that's what we're here to talk about. So Aisling, thank you again for joining us for this conversation. And can I start perhaps at the beginning, trying to understand what the threat is? Should we be concerned about the art market in the context of money laundering, terrorist financing, and other financial crime?
Yeah, so the European Union clearly felt the answer to that question was yes. So typically the art market is accessed by regular people like you, like me, but also very heavily accessed by people who have high net worth or ultra high net worth status. That would include people who are very famous, very politically well connected, very well known. And an awful lot of the artwork that gets sold can be of very, very high value. And so anything that is a high value good, generally speaking, can be misused or abused for the purposes of money laundering. So within the art market, that happens in two different ways. One is where someone has committed a crime and they are holding the proceeds of crime, and they use those proceeds to purchase high value goods like art in the market. But the market itself also has a number of predicate crimes relating to it that are quite inherent. So we would often hear about art thefts or art forgery or art fraud. And all of those three things are also predicate offenses that will generate the proceeds of crime. And so the art market sees both sides of that coin. It can both generate criminality, and it's also used as a funnel for criminal funds coming in.
So in one instance, the art is a means to an end.
Yes.
Arguably. In the other, it's the end itself, where the art perhaps has been stolen or has been forged, and there are a variety of different forms of financial crime this can give rise to. Is this happening very much?
It's difficult to say. The estimation would be that it happens more frequently than we're aware of. There are not a significant proportion of data sets available to us to say how frequently it's happening. And when we think about people who do work in the art crime space, so specifically relating to theft, fraud, forgery, they would contest that they don't see a lot of money laundering or terrorist financing stemming from the market. I would contend, based on my research, that that's because we've not considered both sides of the coin. So if you know you have thousands and thousands of art thefts, you automatically have thousands and thousands of money laundering offences. If there is a significant proportion of fraud and forgery, those are generating the proceeds of crime. And so far, we have not, in the crossover between the art market and the money laundering regime, really gotten used to the idea of how these predicate crimes interact with the later crimes relating to money laundering. So there are very limited amounts of data sets relating to it that we can make use of. I think more time will start to generate those for us. So we have some great examples of situations or circumstances where art has been used in this way, but they tend to be a little bit totemic. It's very hard to say that there are specific trends emerging in a specific place at a specific time with a specific typology. It's a little bit more individualized, I would say, so far.
And part of the reason for that being a mixed picture is because this is relatively recent. The focus on it has been relatively recently. Although there are examples of financial crime impacting the art market that go back many years.
Yeah. So we've got quite a few. Like I say, they are relatively totemic. Some are probably going to be quite familiar to the audience here today. So when the One Malaysia Development scandal broke, which was back in 2015, though the transactions relating to it were even earlier than that, a large proportion of the funds that had been misappropriated from Malaysia's sovereign wealth fund were then utilized to purchase high-value artworks. So artworks by Picasso, by Basquiat were purchased, and they were then gifted to people for the benefit of access. So specifically, the businessman Joe Low purchased these artworks and gifted them to famous people like Leonardo DiCaprio. He inculcated himself with these famous people and actually ended up giving the money to the production firm that made the film The Wolf of Wall Street, which Leonardo DiCaprio starred in. So DiCaprio knows nothing about the background crimes relating to this. He surrendered the paintings to the federal authorities when he realized what he had accidentally become engaged with. But this was a real kind of institutional moment, I think, for comprehending how the art market can be abused, because Joe Low was able to use these misappropriated funds and funnel them into the market and then make further use. And whether the art market realized what he was doing or not presents us with this gap, right? It is not traditional for them to consider what this would look like. And so it's very easy to miss. He is just another high net worth individual. If we're not looking at his source of wealth and funds, we are likely to have missed the fact that he shouldn't have had them in the first place.
Can I pick up on one of the things that you touched on there? The art market isn't used to this kind of thinking. We talked about this a few minutes ago, didn't we, over a cup of coffee. And we recognize that within banking, within financial services across the world, and increasingly in other sectors like accountancy, legal, and so on, we're getting used to having to think about the due diligence around what we're doing. Now, this is relatively new in the context of art, around money laundering, but not so much around theft and forgery.
Yeah.
So I wonder if you could unpack that.
Yeah, so the art market, if we look back as far as maybe the 1930s, 1940s, during Holocaust spoliation across Europe, the Nazis stole a very significant proportion of art, typically from Jewish people, but not just from Jewish people. And they also destroyed what they called degenerate artwork, that is modern art. They were more interested in classical works. And they wanted to generate an absolutely huge museum called the Führer Museum based in Linz. And so they stole thousands and thousands and thousands of artworks. And many of them have never been found, or have never been restituted back to the people who originally owned them. And in the last 40 years or so, the art market has voluntarily come together on an international basis to try to establish how we would restitute some of these things back to the people who originally owned them. So the art market is very used to doing what we would call provenance checks. So when they come into possession of an artwork, they can check a number of databases to see, is it lost, stolen? Are there notations relating to it going missing at some point in the 1940s? They call these red flags, which is very similar to what we do in the financial crime world. And so they are used to executing due diligence on the asset to make sure that the asset itself is viable, that there is secure title relating to it, that they can in fact buy and sell it safely without being challenged in relation to that. It's a bit of a flip of perspective to think about customer due diligence. And so there's a real culture shift that's needed for the art market to comprehend how these things interplay with each other. But they do have a really firm history of completing provenance checks on the artworks themselves. And it's not a world apart. There are definitely some commonalities within those spaces that we should be able to exploit over time.
So would it be fair to say that the art market is playing catch up around this?
I think that's fair. That's not to criticize the art market, I think, for lack of awareness or lack of knowledge. If we go back as far as the 1960s, banks that gave evidence to congressional hearings relating to the Bank Secrecy Act, they pinpointed some of these issues, but maybe didn't comprehend the depth of them, or how SAR reporting would start to impact on all of us over a really extended period. Equally, when we started to apply these rules and regulations to the real estate sector, or to accountancy and legal, or to gambling, there is always a learning curve, because you were coming from your area of expertise and you suddenly have to add this whole extra layer of expertise on top of what you do. And it's not just that you need to learn financial crime, you need to learn what financial crimes are liable to happen in your sector. So you're requiring people to develop an additional layer to their expertise and skill set that, with best intentions, maybe they didn't want in the first place.
Yes.
And so it's adding work, it's adding a cost of compliance. And that is very hard, I think, to take account of if you're a brand new sector to this, right? That is going to be a challenge without question. And capacity building takes time. It took banks time. It's going to take the art market time.
And that's where we are at the moment. And it comes back to what you were saying before about a very mixed picture. It's difficult to determine the extent of this as a problem. We know that there are a number of cases that highlight this. We've rationally, intuitively, it's going to be taking place. But we don't really have a handle on it at the moment.
Yeah, no sense of scale whatsoever.
Okay, so I mentioned that FATF have published a typology report in 2023. Is that reflected in this typology report? Were they attempting to put some kind of scale or measure on it? Or what did that look like?
I don't think that they really attempted to put scale or measure on it, but certainly they noted, based on what we know about these markets, the kind of inherent high value of them, the portability of art, the ability to cross over jurisdictions because the art trade is by necessity a multi-jurisdictional entity, the notion of storing artworks in free ports, which is a little bit on the secretive or opaque side. All of these things were called out as relative red flags that would be easily abused. And therefore we should assume that it is happening and that it's probably happening at greater scale than we've taken account of to date. And that's essentially what the FATF report calls out.
That's helpful. And one of the things that it does is identify red flags. And it's interesting to see that there's a question, Dr. Amol, who's asked about red flags that we can look out for in this context. We'll come on to those in a moment. And thank you very much for that question in the meantime, Dr. Amol. But can I ask, before we think about the red flags, what is it about art that makes it attractive to launderers, to the criminal community? I think some of those things we've touched upon, but can we start to distill that down?
Absolutely. So depending on what your definition of art is, I guess it's kind of as long as a piece of string, right? We could consider a painting hanging on a wall as art. We might consider an installation or sculpture as art. You could look at certain types of antiques or furniture or coins. All of these things may count as art to different people. And within all of these subsets of what I might call collectible entities, there tends to be a proportion of it that is incredibly high value. And in the art market, that tends to fall on things like very famous paintings. The ones that hang on the walls of museums, we would generally recognize as being priceless. We are unlikely to be able to purchase them off a shelf. They're also unique, which means that you can only really purchase it once, kind of like a house. It might come up again in 35 years' time. No one might ever see it again either. And so the idea of being able to purchase something that is incredibly high value, incredibly desirable, is likely to appreciate over time. You may be able to put it under your arm and walk it from place to place. You may be able to store it in a location that doesn't have a large amount of oversight. It may be worth many, many millions of dollars. You may have purchased it in one jurisdiction and moved it to another. You may have purchased it with multiple currencies. And all of these elements add to the notion of the art market offering considerable red flags for someone to abuse or misuse in order to utilize the art market to launder their cash.
So we'll come on to those red flags, but there are a number of features around the art market that make it quite attractive to the criminal community. And you've touched on investment. So this is something that you might acquire that over time might actually grow in value. It's transferable. It can be moved cross-border relatively easily. And because of its high value, then it distills down the challenge to a smaller number of transactions. And of course, as we were talking about before, there isn't the regulatory maturity
Yes.
There isn't the maturity within the market in terms of countering this. So there won't be the same level of due diligence that needs to be navigated through. And I know when we spoke before, you talked about the opaque nature of the market.
Yeah. So as the market has developed over time, and if we think logically about it, people accessing this market may be perfectly average citizens like me, who all my information is available on Google, but they could also be very, very wealthy, well-connected people who have a very tangible and reasonable expectation of secrecy and privacy. So I think about it in a sense that if you own a mansion in the middle of nowhere and you've got 17 incredible pieces of art hanging on your walls, if everyone knows you're there and they know what's on your wall, let's be honest, they're going to break in and try and steal it. And so there is an inherent secrecy and opacity that stems in the art market that has been very reasonably created over time to enable the security of both the artworks and the people who are purchasing and trading in them over time. So it's not that that's inherently a bad thing or done in bad faith. It offers a sense of security to the market. It's relatively easy to abuse if you've got poor intentions, though.
So there are similarities with high net worth individuals within financial services.
Yes.
That tends to be a relatively opaque market, and for some of the same reasons. And something else that you touched upon, which I thought was really interesting, was that the gifting of the painting to Leonardo DiCaprio. And so here, there may be something around reputation washing or gaining a foothold within a certain celebrity community or something else that's going on that might be attractive to certain criminal types.
Yeah, and he's not, again, Leonardo DiCaprio has not committed any crime here, but he's certainly not the only lived example of this. So a number of years ago, the Oligarch Files leak revealed that Roman Abramovich owns an absolutely stellar art collection. It's worth about $1 billion. We don't know where it is. We have no access to it. He acquired it very legitimately over a very long period of time because he had a lot of money. He was also the owner of Chelsea Football Club. And as we became closer and closer to sanctioning him, he transferred some of the ownership of the artworks, all of which were held in trust, to his ex-wife. And so they are no longer sanctioned. We can no longer take them. The Ukrainian government has been trying to get us to seize these artworks for a long period of time. But there would have been about a decade in which he would have been recognized as a real stalwart in the art world, along with his ex-wife. And so there is an element of purchasing reputation that can come from sources that maybe afterwards we look back on and consider, did everybody get a bit played in this situation?
So let's come back to our risk indicators. And I would like, in a moment or two, to think about sanctions in this context. But what sort of risk indicators should we be looking for?
Yeah, so I think if you're a financial institution or a payment firm, it may not be obvious to you that you have businesses involved in the art market on your book. So I think one of the best pieces of advice is to go looking for them. They may be retail customers that deal in art using their own retail account, just as purchasers. Do you comprehend their source of wealth and source of funds? They may be business banking customers that operate as sole traders or intermediaries in the market, or who do a lot of buying and selling internationally for the benefit of further dealing. Are you sure that they are savvy, legitimate art dealers? Do you comprehend what their nature of business is, how they're doing it? In all of these instances, have you got comprehension of source of wealth and funds? Have you done things like PEP and sanctions checks to make sure what their connections are and what their exposure may be in these kind of spaces? So they're relatively familiar controls, but we may not often think of them in the context of the art market. So if you've got these businesses or people on your book, you may also want to look at realistically what they're doing with their transactions. Are they traveling to art fairs in multiple different places per year? Are they making very high value purchases seemingly all of a sudden, but as a relative trend across their life cycle as a customer? How much exposure do you think you have to the market? And can you then cross-reference and see, are those art businesses maybe registered for regulation with HMRC, which indicates that they're taking it seriously, that they are trying to do the right thing? Or are they ones that maybe haven't registered, and can you comprehend why? So there are ways that we can, as financial institutions, start to comprehend our exposure to this. But I think that does require us all gaining a little bit more knowledge about what the art market is, how it operates, who the players in it are. And that's likely to be quite fresh to a lot of people in banking, in the same way money laundering is going to be quite fresh to people in the art market.
This is really helpful. And I think we could perhaps put it into a wider framework. When we think about risk indicators, sometimes it's useful to organize them into customer focus, product focus, geographic focus. we use that framework in other ways as well. But we can look at our customer, and what you've described is, does it make sense? Is this a business? If it's a business, has it been registered with the relevant authorities? Is there a pattern of activity that is consistent with whatever this is that's taking place? It becomes more interesting, though, when intermediaries are used. And there's a question on the feed which picks up on this and goes a little bit further and talks about anonymous individuals buying at auction. Well, of course, it might be anonymous to the public, but they won't be anonymous to the auction. But what about intermediaries?
Intermediaries are tough. So the regulation doesn't offer a specified definition. Nor does the UK regulation particularly. So you could have intermediaries that do or do not financially gain from a transaction. They may be introducers who gain or do not gain from a transaction. They could themselves do a little bit of art dealing on the side. They could call themselves advisors or consultants, and you may never know what their financial implication in all of these deals are. So defining what is an intermediary is really difficult. And the British Art Market Foundation issued guidance to art market participants to support in completing customer due diligence, and they included intermediaries and gave examples of how these intermediaries might work, what they might be doing as part of a transaction, and as a result, whether or not you should conduct due diligence on them. So for our purposes as financial institutions, we maybe don't need to understand them at that depth, because the art market participants should be. They should be completing that due diligence. And so we would have a more circular comprehension across all of these markets as to whether or not things are being done in a kosher and legitimate way.
And if the intermediary, just to work this through with you, so if the intermediary is the individual that the gallery or the auctioneer is selling to, so they don't know who it is moving on to, then that intermediary themselves has an obligation to follow money laundering regulations.
They do. There are plenty of art intermediaries who should also be registered as art market participants for the purpose of regulation. Yeah.
But that presumably wouldn't absolve the auctioneer or whoever's
Correct.
making that sale from nonetheless a concern about, well, what is source of funds, source of wealth?
Correct. Ultimately, you still want to know who your end customer is, because even at its most basic level, you still want to sanction screen them. You still want to make sure of basic security protocols like that. And so you still do want to know who your end customer is. That's a bit of a sea change for the art market, but the BAMF regulations and guidance do make it pretty clear that you should comprehend a lot more about your full transaction scale. And a lot of the transactions in the art world are very complex. We're talking about multiple parties that have multiple financial implications as part of these deals. There will be multiple contracts on multiple dates. Auction houses will typically sell things very quickly, but an art dealer might go more slowly. And so all of these things need to be taken into account to conduct the right due diligence on the right parties to a single transaction.
To be clear then, if we're talking about something of high value, where there's potentially multiple different sources of the funds to acquire it, potentially a number of different owners that will have a share within this, the nature of the due diligence is going to be significant. This isn't something that can be done within half an hour across a desktop, just checking some various online sources with a little bit of open source. It actually needs a more concerted, joined up. And there are businesses that offer that kind of a service.
Yeah.
Like Control Risk or Kroll, and there are a number that will help you to navigate through that, but it is something that needs navigation.
Yeah, I think there is a simple end of the art market. Say if I go to the Affordable Art Fair in Hampstead Heath and I purchase something that's maybe exactly €10,000, which is the threshold for where regulation kicks in, I'm one person. I'm easy to ask a passport from. I'm easy to do some due diligence on individually. But where you have a sale of something like a really large Picasso from his blue period that may need to be consigned to an auction house, put on public auction with bids coming in from 7 to 8 different jurisdictions, maybe with some bids that are represented by an intermediary rather by the end purchaser, those transactions are really difficult and complex. And you're trying to understand every single step of them as you go, potentially at quite a tight timeline. A person who's spending $50 million wants their artwork pretty quickly, right? They're not going to wait 7 months for you to complete due diligence. And so we have compound complications relating to completing due diligence like this.
And that due diligence would typically take place after the auction is taken, or would there be a requirement for due diligence in order to take part in the
It depends on what an auction house decides to do, realistically, right? They are mandated to do due diligence, but just because you've bidded on something doesn't necessarily mean that you're going to win it. So is it practically helpful to complete all of that due diligence at that point? I would contend no. Others might contend yes. I think there is some practicality and risk-based approaches that need to get built into this. And maybe we've not yet established as a money laundering regime what those are, because we don't have an adequate comprehension of how the market works. Really, it's the market that should be explaining back to everybody else in money laundering, this doesn't make sense to us. We should instead consider it in this way, and that would be more risk appropriate. And that sense of a feedback loop needs to come into existence.
And that takes us back to where we started, recognizing that this is a relatively immature market in these particular terms. We're going to come on to think about sanctions in a moment, but before we do, Thorsten, thank you for your question, which picks up on something that we've just been talking about. And Thorsten asks, what are your views on fractionalized art? To what extent is fractional art ownership a mitigating measure to financial crime in the art market?
Yeah, so fractionalizing, if we're going to have one single artwork that's maybe owned by 500 people, right? Think of it like a pooled fund, essentially, where the artwork is a Vermeer, right? I'm a big Vermeer fan, so I like to try and elbow him in everywhere. If we have 5,000 people who are going to own a section of this Vermeer each, do any of them own enough of it that their value is over 10,000 euro? Do we have to complete due diligence on all of them? If we are the investment fund that's purchasing the artwork on behalf of our customers, we're more of a financial intermediary. And so we would do our pretty standard customer due diligence on our fund applicants. I would argue we should also do due diligence on the artwork. And we may want to consider when the time comes for a decision as to whether we sell that artwork, who we're selling it to, who buy, and whether we've got solid due diligence on everyone who's underlying as part of that pooled fund. But I think it's very, very similar to your basic mutual fund premise in the background, where fractionalizing probably does mitigate some financial crime risk because you don't have an individual owner. Generally, it will be at the higher end of the market where one person is purchasing the Vermeer, that it's more likely to raise concerns for me than fractional shares.
But there's a theoretical risk, isn't there? In the same way that we know that crowdsourcing has been used to raise terrorist funds, there's at least a theoretical risk that you could use this as a crowdsourcing option.
Correct.
Potentially even hyper-inflate the value of something as a way of raising funds, channeling them.
You could also raise a lot of funds off the back of a forgery. Anyone who's involved in fractional shares of an artwork may not be an expert enough, may not have access to the artwork to look at it up close and determine whether or not it's legitimate or not, may not know to ask for provenance reports or check the catalogue raisonné related to the artist to find out whether or not this is even legitimate, and therefore may find that they've essentially become involved in a massive fraud. So there are risks on both sides of that coin in the same fashion as there are for anything else that we might try to sell that could be inflated in value.
We've only got a couple of minutes left. Before we start to close, can I just ask you about the intersection between art market and sanctions? We've talked about it a few times. Is this a real concern? Is this something that we should be aware of?
I would say so. I think when Ukraine first started to petition international governments relating to sanctions regimes in early 2022, one of the things that the Ukrainian government picked out was that a large volume of Russian oligarchs have acquired over a very long period of time large collections of art. And they were interested in all of that artwork being seized, liquidated, and the funds being handed back to the Ukrainian state. It's very difficult to do that when you've got people like Roman Abramovich who are very savvy and have very savvy people working for them who can place those artworks in trust and effectively put them beyond the scope of any such seizure. So if you've got a really strong portfolio of art and you know you are about to be sanctioned, you probably also reasonably can do something to put your artwork beyond the scope of any kind of seizure in that same way. It would be relatively simple if you have access to enough funds to purchase artworks in an immature money laundering and terrorist financing regulated space, and then potentially to move that artwork overseas, liquidate it via enablers, and then all of a sudden you've got access to funds that you can use again. So that ability is there. From May of this year, the art market participants are required and mandated to report through OFSI in the same way that, your banks and financial institutions are required to. And I think that's fundamentally a good idea because I can see the risk of sanctions involved in the market. But it feels like 5 years ago, we told the market that it needs to get used to money laundering. And now we're telling it that it needs to get used to sanctions. And it's a bit like compound interest on something that's going downhill more and more. We are asking a lot of people who already have full-time jobs and expectations.
Yes. And this, of course, brings us once again back to this question of the culture and the maturity and the challenge of embracing not just a new set of requirements, but one that is arguably taking their consideration, their due diligence, their thinking in a totally different direction, one that they weren't perhaps appointed or trained to consider in the first instance. Okay, thank you. We're moving towards a close. In a moment, I'm going to invite you just to bring this to a conclusion with anything that's burning on your mind that you think we could talk about just usefully, or you could mention usefully as we do close. Before I invite you to do that, though, can I thank everyone, wherever you are in the world, for joining us for this event. We hope it's been useful to you. In a fortnight's time, I will be broadcasting again and having a conversation with an HMRC, customs director, UK customs director, around the nature of financial crime that he is seeing within the customs space. For the moment, though, as we bring this to a conclusion, Aisling, any last thoughts?
No pressure. I think what I've learned through all of this research, combined with the sort of 11 years I've spent in financial services, is that we gain most where we share most. So a lot of people in banks have had to learn how the legal, world works, how real estate works, how gambling works. It would be very helpful if we could reach out to our friends and colleagues in the art market to say, we can help. We can help you get used to this. We can help you work out what a risk-based approach is. Offering that support across our industries would probably help us capacity build a lot faster and would enable a lot of information sharing back and forth, because in as much as we're saying the art market doesn't have a fully mature view, I'm not convinced that most people who work in banking know a lot about the art market either. So there is a benefit that we could all kind of gain in kind from that. And I don't think we're particularly good at it. So I think that would be my takeaway that I would like to change the world for.
Aisling, thank you. Thank you again.
Thank you for having me.